These books brought me from not liking Bitcoin, being anti-Bitcoin, and being a Bitcoin hater, to putting a lot of my money into it and being so excited about what it means for the world and the opportunity is for individuals reshuffling the deck of money and wealth in the coming years and the coming decades. So welcome in, fam. Much love, Trav here. If you're a Bitcoin enthusiast, you're going to enjoy this video. If you're a book enthusiast, you're going to enjoy this video as I go over about 14 books. I did a lot of research before I made this move. You don't have to read all these books, though. I'm going to explain what I learned, and I'm going to take you along this path. It's going to be kind of a longer video, so you're welcome to put on the audio as well. Go for a walk, go for a workout, go for a drive and listen to this. And if you're not into Bitcoin, you've never invested, but you're sort of interested, so you clicked in this video, then perfect too, because I went from not really knowing too much about it to, put a lot of my money into it on the run up this year, buying at 9,000, 10,000, 12, 14, 15,000, even bought some at the top here. At 19,000, we'll see what happens. I'm not sure in terms of investment of whether today is a good day to buy, but I think that for most people, holding some Bitcoin is going to create some opportunity for you in the future and create some excitement for you in the future. So before I want to get into the books, I want to disclaim for you, if you are not eating good food, you should spend your excess money on improving your health and your diet and your community and your lifestyle. And not until you have excess dollars should you think about Bitcoin and buying in dollars. You could set aside a small amount. I'm a fan of living a modest life, living a humble life. It's not about making money, but living a lifestyle where you don't need a lot of money. And for me, what led me to investing is getting to a point in my life where I've saved a lot of dollars and I just have a lot of dollars. And what should I do with them? I'm earning more every month than I'm spending. Again, I have a modest lifestyle. And then also, without getting too personal, inheritance coming. It's not like a major amount of wealth, but it's more dollars than I need. I don't need anything. So wanting to put my dollars to use for later, if I have kids, or if I want to buy some land, or if I need to take care of family, or I want to move or travel, more opportunity later. And also just paying attention to the world here with COVID, with stimulus. I got my $1,200 stimulus check. I wanted to invest it. And the organization that I work for, we got $500,000 in paycheck protection. And we're also getting a huge amount of money in CARES money from the stimulus, not directly through us, but through our partners who are spending it with us. So people think that all the stimulus is already done. It's still coming out. A lot of it, the states are still holding, or organizations are still holding, and it's going to get spent throughout December. So you see this chart, the M2 money supply has increased by 24% this year. All the money out there, 24% of it's in a sense been printed in this last year. It's a crazy thing. So I became very interested in what I'm supposed to do here. So one of the first books I read this year, and I learned through reading books. So I read a lot of news, I read a lot of podcasts, I talked to a lot of people. But The Richest Man in Babylon is not about how to invest, it's about why you should invest. It's also, a lot of it's about protecting your investments, being smart, and being wise. So The Richest Man in Babylon, I'm not going to go into detail on this. You can read this book in an hour. It's a cool book. So my friend Peter, shout out Peter if you watch this video, he recommended this book to me. This is the next book that I read. It's, I'm holding up the Bitcoin Standard. There's only one book in here about Bitcoin, and I got to it at the last. Bitcoin is the last thing that I looked at. First thing I looked at is the stock market. So, what I learned from this book, and John C. Bogle's basically the godfather of index funds. What I learned is that on average, index funds, which is basically just a slice of the whole stock market, outperform financial advisors 95% of the time. So that discouraged me from getting a financial advisor and having someone manage my money. Because a lot of people said, get a financial advisor. Well, financial advisors underperform index funds 95% of the time. So why should I get a financial advisor who's not going to care as much about my money as I'm going to care about my money? One of the reasons, and even further than like, okay, I would rather get index funds than get a financial advisor. But the problem with financial advisors, or one of the problems with financial advisors, is they care about assets under management. They want to hold your money, and they want to take 2% of your money annually. So they're going to discourage you from investing in ways that they can't control, such as reserved rare Magic the Gathering cards or Bitcoin, both of which massively outperformed stocks in the last 10 years. So if a financial advisor is not only going to underperform random index funds, but also is going to not point me in the direction of the best performing assets, I'm not going to get a financial advisor. So that's what I got out of this book. And it also, I mean, index funds are good. It's not very exciting though. They outperform inflation by a little bit. But I'm not total Bitcoin maximalist. I do hold some index funds. So that book is a cool book. But you don't need to read the whole book. It's pretty simple. Index funds beat money managers. It's cool to have someone advise you, but financial advisors are money managers generally. So they're going to hold your money. Then I started reading on real estate. None of these books is like, they're sort of bread and butter books. Just the top ones on Amazon, rental property. So what I learned from these books is that not only is real estate actually a lot of work, it's not very passive. It's a lot more work than say buying and holding an index fund. But this is something I would come back to. I think that Bitcoins will outperform real estate in the short term, but I mean, real estate's the goal. It's safer like owning land rather than owning some imaginary asset. So I'm into real estate. I'm not against it. The main reason that I haven't gone this route is because on Oahu, where I live, the real estate market's outrageous, really expensive. I don't own the land that I live on, but I feel extremely secure in it, and I have ownership of it and stewardship of it, that I don't need land for me. And what's within reach of what I could buy would be like condos or condominium, where you spend $200,000 and then you rent it out for $1,500, but you have a housing HOA fee. You have to pay like $700 a month, and then there's high variance and high vacancy of tourists not coming, people leaving, and also with the COVID relief, you can't evict people, so they can't pay you. It's just like, no, I'm definitely not going to go into real estate on Oahu right now. I might come back to it later. So I read those books. The next place that I read is I wanted to learn about inflation. I wanted to learn about hyperinflation and inflation. So this book is on Weimar Germany and the hyperinflation that happened in the late 1910s, 1920s. This is about the hyperinflation in Zimbabwe, and this is a how-to guide on hyperinflation based on things that happen in South America. And hyperinflation is something that happens to a lot of currencies. It happens all the time. It happened to the Chinese currency when my Chinese family was emigrating from China. And there's stories about wheel cases or suitcases and wheelbarrows full of money, and there's a possibility the dollar's going the same route. I'm not saying it's for sure. We may go in the other way, which I'm going to get into, but I wanted to know what would happen if they print so much money that it just starts to lose a lot of value. And I found these books really helpful and sort of enlightening, watching the run-up of Bitcoin, not just this year, but in the last 10 years, is that a couple important things that I learned from this. One thing is people say, oh, they're going to... Well, the first thing is this can definitely happen to the dollar if they decide they just want to helicopter money to people all the time. The total value of the currency doesn't increase, So the more money they print, the smaller the slice. Therefore, any sort of asset or equity increases in monetary terms, not necessarily real life terms. So during these times, like in Weimar Germany, the stock market was going up and up and up, and it was crazy, and people couldn't believe it. They sold it because they thought it's a bubble, it's going down. But really, the mark was just going down and down and down. So now, right now, you see like the stock market going up, and Bitcoin go up, and gold go up. It's like it can't go up forever. Well, not sure, don't know, but that's what they thought in Germany. Really, it was the market's going down. So maybe the dollar's going down, and it can just keep going up as long as the dollar's going down. People who held the mark, or people who held the currency, thought it's going to turn around, it's going to come back. They eventually went to zero. It was the people who did foreign exchange or just held different currency that did better. And what's interesting to note is that the governments did try to ban foreign exchange. Like people say the government's going to try to ban Bitcoin. Well, the government did make foreign exchange illegal, but people still did it anyways. The elites did it anyways. Businesses did it anyways, because in the end, the stronger currency, the harder currency, is going to naturally emerge anyways, even if it's illegal. So it makes me a little less scared about Bitcoin getting banned, although we'll see how that happens. Another thing that I learned from this is, and I'm not necessarily advising anyone do this, but people who would take out loans in the devaluing currency did extremely well because they had to pay back small amounts of it. So it was all about spending money as fast as you can, taking out loans and buying things that held value, whether that's cars, whether that's other currencies, whether that's property, whether that's land. So that was really interesting. It's like, if the dollar's going down, you can take out dollars and loans in dollars and buy Bitcoin. That's how bubbles burst, but that's also in a devaluing currency situation, you do quite well with a strategy like that. What else did I learn from these? Another thing that I learned is just that farmers did quite well, because farming, like, people need food, and also if you don't need money, it's pretty good. So for instance, I don't necessarily make a lot of money, but I don't spend very much money because we grow our own food for the most part. So I don't spend money on food, and I feel we're like essential workers, as we saw with COVID-19 as well. Farmers are essential workers. They do well generally during currency crises. Yep. So these books were really helpful and interesting. What else? I read The Snowball by Warren Buffett. This book is pretty long. I'm going to summarize what I found useful. One thing I found useful about this book is that Warren Buffett, he diversified more over time, but he was often very concentrated in his investments. So people tell you don't, diversify, but you can see from Warren Buffett and Charlie Munger that you don't necessarily need to diversify. You need to be really well versed in where your money is, well researched, and know where it's going, and have a couple of those, and you'll be okay. It's better to know a lot about a couple investments than know little about a lot of investments. So I also learned from him how much time it takes. In theory, it only takes a couple clicks to move some money around, but in practice, there's a huge amount of reading, there's a huge amount of research, there's a huge amount of conversations that should happen before a major asset allocation. So one of the things that I took away from this is I don't have time to be a professional investor. I don't have time to research everything. So I'm just going to research a couple things and know them really well. And that way I can know what's appropriate price and what's a long-term plan. And I'm not going to invest in everything. So I'd research a Bitcoin and master that and go in that, rather than know a little bit about this and that, and I'm just going to spread my money in case I'm wrong. We'll get into protection, but that was really useful to learn. Just study a couple things, focus on those things. You'll do okay. Now I read Nassim Nicholas Taleb, The Black Swan and Fooled by Randomness. These books are cool. A couple things from these books. Another thing is like John Bogle. He's against money managers basically, just because by chance some of them are going to do well. Someone has to do well when there's so many of them. Someone, by a law, by mathematical law, someone has to do well. So that doesn't mean they're good. He shows that over time, most traders eventually blow up. They go to zero and exit trading forever. So that caused me to not want to be a trader. I don't want to trade. I want to buy and hold, which is, works well for Bitcoin or works well with stocks or works well with real estate. I don't want to spend a lot of time anyways. The premise of these books is that the Black Swan, there's some rare events that are going to blow people up, like COVID, like a stock market crash, like 2008 recession, like 9/11, like some going to war, various things that you can't predict for. And it's easy when things are going up, but if you try to imagine things that can go wrong and then protect yourself, that's going to help you out a lot. It's going to help you out a lot. Rather than just make money when the markets go up, how can you make money when the markets go down too? So that's really useful thinking. So if it goes up, you're happy. If it goes down, you're happy. How do you actually do that? So something that goes well with that is the next book that I read is what I learned losing $1 million. So together these books helped me create a downside risk plan where I won't go below a certain level of money. Before I read these books, I was more tempted to just put all my money in Bitcoin. But these books led me to actually let's keep a good amount of dollars anyways. I think dollars are a poor holding, but I have enough Bitcoin that if Bitcoin goes way up, I'm going to do really well, and I'm just going to sleep better at night knowing that if Bitcoin goes to zero, I still have my dollars. Probably not going to go wrong, or probably not going to go right, but this creates lowers the variance of what might happen. So I'm not going to risk everything. I'm going to keep a whole lot of what I have, and I'm going to sleep better at night for it. I'm never going to go to zero. I'm never going to blow up and go to zero. But what can happen? If you're not careful, if you trade on leverage, if you risk everything, you can go to zero. If you don't risk everything, if you're careful, maybe your upside isn't quite as high, but you can still do quite well, and worst comes to worst, you're going to be okay. You're going to sleep better. So, and then, if you're like a stats nerd, this is so cool. Big Debt Crises by Ray Dalio. Ray Dalio manages Bridgewater, one of the biggest funds. There's 3 books in here. I'll just pull out and show you. But this covers the markets, and it covers real life market events. And it's written like this. It's got all kinds of charts, sidebars. It covers the 2008 crisis. It covers the Weimar Germany crisis, hyperinflation crisis. It covers the Great Depression. And during each section, it has newspaper clippings from each day during the crisis and up to the crisis, so you can see what the news was saying and what people thought was going to happen, which was really interesting. This is really useful because it helped me learn the flip side of hyperinflation. Is there's these deleveraging events where no one can pay back their loans, no one can pay back their credit. A huge majority of money out there is credit, and it can disappear. So actually the dollar increases in value. Equities, assets, real estate, stocks, Bitcoin goes down in value very quickly compared to the dollar. So we might be headed there too, based on what's happening. Maybe everybody defaults on their mortgages. The economy is just so bad that all of a sudden people are defaulting on their loans. The stimulus didn't come in time. The stimulus doesn't cover more money than credit's disappeared. People start to sell off. People have less assets, become less credit worthy. Suddenly you have a huge plunge. that's the thing that can happen too and might happen. And that's also a reason why I'm keeping a large amount of dollars, is just in case that might happen. Bitcoin might be a great investment, but it might go down anyways because we might have a deflationary crash. So that's a lot of books. The last book I'm going to share is The Bitcoin Standard by Seyfedin Amos. This is the only book of these that's actually mentions or talks about Bitcoin. Ooh, there's one more. I'm going to run and get it. Stay with me. Thanks for staying with me. It's called The Bitcoin Standard. And this hardly even covers Bitcoin. It talks about it at the end. It just talks about money, hard money. What makes money good is really scarcity. Or what makes it something you would want to hold on to is scarcity. It's not that the dollar, there's anything wrong with it as for doing business, but as a way to save money, over time it goes to zero because there's a large amount of flow of it adding to the stock of it. So essentially what makes Bitcoin unique is that it has a transparent stock to flow. You know there's never going to be more than 21 million. You know exactly when the new ones are coming out. And you know that just gives you a lot of predictability and a lot of ability to plan. And it is pretty scarce by the programming. So based on that, it's a pretty good way to save money. Or to save wealth over time. It's not necessarily a great currency, but it doesn't have to be. Again, I'm talking about I have extra dollars. I'm going to use my dollars to do commerce and to go shopping and to get paid, but I want to hold on to my wealth. Well, something that's really scarce. So it covers a lot of different monies that happened. It debunks certain monetary policy, and then it gets into Bitcoin and explains why it's good. And then one other book that I read in here, and there's even more. I read a lot of books. I spend a lot of time before I put in money, because if you're going to put in money, you should do your research. The Price of Tomorrow by Jeff Booth. Why Deflation is the Key to an Abundant Future. And something I learned from this is that we talk about, the Fed says, oh, inflation is only 2% a year, and your phone gets cheaper, and your technology gets cheaper, and your consumer goods get cheaper because we get better at producing things. So they say, hey, there's not that much inflation, but that's just because technology is deflationary. But meanwhile, what's going on with college education is going up 10% a year for 30 years. Why are stocks, real estate, even Bitcoin, all these things getting more and more expensive? It's the true inflation that's happening is hidden by the deflationary nature of technology. So this was sort of a wake up of, wait, actually, something's not right here. And this also led me to want to buy Bitcoin. So that's why I did it. Should you do it? I think so. Even a small amount is now, when you watch this video, the absolute best time after it's had a big run up this year. Don't know. It might not be the best time. You might be wrong by as much as probably not 50%, but maybe 30%. But it's better to have sooner than later. On average, it's better to have sooner than later. It's highly variant. Sometimes you get punished by buying too soon, but on average, it's better to have sooner than later. It's a pretty small market cap of less than 500 billion compared to a world of like $100 trillion of hundreds of trillions of dollars of the money supply and all the assets and everything in the world. So Bitcoin has a long way to grow, and it has some risk, but it's a pretty nice alternative to just holding dollars, just based on the stock to flow of they're not going to be randomly 25% more next year. It just doesn't work that way. It's programmed, it's transparent. There's no government that's going to print a bunch and just give to their cronies. So hope you found that helpful. Hope you found that useful. Please comment down below anything you want to add or any other books you think are good or any flaws in my thinking. I've already taken my action, but by keeping a bunch of dollars, I have optionality to my decision making. I can trade. I don't really want to, but you know, the dollars are meant to be spent eventually, not meant to be held forever. So if you think that I'm wrong, please comment down below too. And I'll, yeah, one other question that I have that I'll answer right now. Why Bitcoin? Why not Ethereum? Why Bitcoin? Why not Ethereum? I read Ethereum too. It was just like, I don't understand this, man. And I'm a smart person. And my understanding of Ethereum is Ether as the asset. If Ether becomes really valuable, it hurts the utility of the platform because the fees go up. So wouldn't it make sense for the, like, it should cost less for the platform to be good. So it didn't make sense to me. That's why I don't have any Ether. I have only Bitcoin. So I could be wrong on that too, but it also goes back to Warren Buffett. I don't need to diversify, especially if it's into something I don't understand. It's much better just to invest in something you get. And I get Bitcoin. It's simple. It's a lot simple. It's pretty complicated, but it's still a lot simpler and easier to understand than Ethereum. Ethereum is, and I could be missing out on something, but in general rule, don't invest in what you don't understand. So do your research, read a pile of books. You'll feel a lot more comfortable about it. It will cause you to not do panic selling and emotional actions. So hope you find that useful. Appreciate you. Talk to you soon. Hit the thumbs up button if you found this useful. Okay? Much love and peace.